board. I have a little board in here. Monday. I'm going to definitely put up Monday, which was yesterday. Let's see how this session goes. See if it's a session worthy of me taking time to go put it up on all the rest of the fluff. All right, so let's get rid of that. All right, so like I said to you, we're going to go back through yesterday because everything Uncle said yesterday, everything Uncle said yesterday happened. Okay. And all the concerns that I have, and like I said to you, stop me if I'm wrong, stop me if you think I'm telling lies or there's any issues, all right? But everything I said yesterday in regards to the markets and our concerns played out. Now, Monday is normally a bit more of a funny day because it's the start of the week, as we explained, but everything we kind of said, all my concerns played out. And we're going to start here looking from the Dixie. Obviously, we can see we're in a real discount in here. We'll start off in the Dixie. Now, I haven't drawn anything on my Dixie. I haven't drawn anything on my, well, not this morning anyway, maybe after the session yesterday. But the concern I had, all right, is, can you see here on the daily time frame? All right, this is our Dixie, our dollar index. Can you see Uncle's concern? JP's concern was this in here. This little bit of an imbalance and this little bit of a gap scenario that I put in here. Now, I'm not trying to say the market's going to stop there. It might just run straight through there. But at the time, which was yesterday, we was quite a distance away from there yesterday, okay? But I was concerned that the market wanted to come up in here, yeah? And that's exactly what the market did. It came up in here, okay? After first initially going and pushing in a direction. Let's go to our actual EU, okay? And we'll skip back. Oops, we'll skip back to yesterday. So yesterday, initially, we took a sell. And this sell, after dancing around a little bit in here, you know, it pushed down all the way down here. Check the times, check whatever you want to check, call me out. All right. And we finally took the liquidity, which I said, from Asian session lows. This was Asia session. I did put some pictures in the group. One was this market where we got an entry in here, if I can remember, somewhere up here. Okay, somewhere up here, somewhere in the session. If we look at the time, if this is going to show me the time, what's going on there? Oh, no. My trading view's been moving mental at the moment. I don't know what's going on there. Why is it stuck? Let's refresh this. Let's refresh it, see what happens. Let's see what happens. See what happens. All right, so you know some people call you and they call you again and again and again and again. Like, all right. Anywho, let's go. So as you can see over here, all right, we're going to go back through everything that happened yesterday. So yesterday's scenario was, we looked at the Dixie, there was a concern. The concern was the imbalance. I identified the imbalance and I said, though we were here yesterday, have a look, we were here, all right, here. This is where we was here. Look, you can see my little orange circle, remember? Yesterday, I identified this little orange area here. It was below this accumulation area where the market wicked below here. From here, the market gathered some strength. That strength gave us our sell. That strength gave us our sell until our sell in EU. So this is Dixie, the dollar index. This is USD, all right? And this here area where we saw a manipulation W form, the market tapped in and it pushed all the way up here. You can even still see my little bullish position here, okay? It pushed all the way up here, gave us our sell. It went all the way up here. It took Asian session highs, which was, here's the Asia session, this red box. For those of you who don't know, I've got some colors on my chart. Those colors on my chart are the only kind of indication that we really use. And it just identifies our sessions. Okay, I'm flashing them on and off right now. Yeah. The red identifies Asia session, yellow identifies London, and the bluey greeny kind of color identifies our New York session. Now, not just, it doesn't identify the whole session, it identifies a kill zone window where there's the most volume in that time period. But you could draw a line out from all the sessions, and until it touches the other session, it's still that session. What I'm meaning that this London keeps going. This is all still London session until New York kicks off and actually overlaps in New York. Okay, but this yellow block is the kind of kill zone window when there's the most volume and where we can catch good moves. It's just an indicator that I use. Okay, you could use any other indicator to identify your session. This is the one that I use. Okay, but apart from that, we hardly use any other indicators. Why don't I use any indicators? I'll tell you why. Because I know that indicators are after price. Okay, someone hasn't created an indicator here that is telling the market what to do. Okay, these indicators are taking into consideration a handful of variables, yeah, including volume, price, time, handful of them. I'll tell you them in a minute. They'll come back to me. Yeah, they're using a handful of those things, and then they start to plot. So if I had an indicator right now, someone's saying the EMA, oh, I've got this EMA here, and I just sell when the price gets under. Well, that EMA is always correct. It's always correct because it adjusts according to price. All right. It changes according to what the price does. So I'm just like, why should I get the secondhand information from the indicator when I can get the information from price itself? All right. So this was the first buy over here. Now, what happened with this buy is we came and we took Asian session highs. My indicator back on. The same time we saw Dixie take Asian session highs, which was about 2 o'clock, 2:30, all right, start of the New York session, we saw our EU, let's go over here, we saw our EU and our GU turn around for the buy, all right? And typically, guys, if you've seen these markets enough times, you would see how there's a lot of the time London likes to push in one direction and New York likes to come and push in the opposite direction. Yeah, just to be a pain in the behind. All right. So, you would see how the markets had this push here from up here. Yesterday, this was, look, says Monday, the 30th of June. All right. This market pushed down here, took the liquidity. The same way the Dixie took the Asian session highs, Euro USD took Asia session lows. Exactly the same time here. Can you see this is Asia session? The lows were taken by this energy here, and then the market went bullish. This is New York's doing. All right. My trade yesterday was from up here to down here, and I was cool. I was good. I actually took a buy also in this market. All right. Which probably stopped me out before the night. So around about here before I left the house. All right. Now, easy trade in line with our understanding, with our strategy. There was some hokey cokey that went on in the middle here, and this gave me even more reason to understand why this market may have turned around. Okay, why did it give me more reason around here of why I thought maybe this market had a possibility to get bullish? Let's see if somebody knows. Higher level question. The market, we got in a trade from up here, pushed down, came all the way down to here, didn't quite take the lows. Okay, came back up here, started doing something. What did it do? It's pretty obvious, it's on my screen. What did it do? Let's get some interaction. It accumulated. Yeah, started kind of going there in this little sideways action. After accumulation, what do I expect? Especially when it's close to a level of, beginning with L?
Liquidity.
That's right. So this market starts to accumulate, goes sideways, right above a level of liquidity. So what am I expecting next?
Manipulation.
The market manipulate. Thank you very much. The market. See, I'm saying you lot don't even know. Without you even knowing, I'm just creating some machines. Yeah, let's go. Everyone knows the answers. Let's go. Manipulate it down here, and then after manipulation, what am I expecting?
Distribution.
Distribution. And the market just distributes and just keeps distributing. And I'm actually annoyed that I didn't take the whole part of this trade because the market absolutely ran and ran and ran, all right? And ran some more. Let's drop our time frame down in here and let's see if there's a reason for us to ever get out of this trade. Let me show you something, guys. And this is for the people that don't understand how to get out of a trade. You ready? On the 5-minute time frame, which I like to adjust when I'm in a trade and it's doing really well, I do like to zoom out and look at the trade on a 5-minute time frame. Why? There's less noise. If I'm looking at a 1-minute time frame, my heart's in my mouth because the market's just it's doing madness. It's moving too much. But let me show you something. If this push up in here, someone say, "Oh, Jay, but my problem is I don't know when to get out of a trade." Well, look at this trade. This market's done this, done this, done this, done this, done this, 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 and that. Nowhere in this journey does this market say to me to get out of the trade. The only time this market says to me to get out of the trade is when it does, when it's actually done, if you really wanted to go there. This, and this on a 5-minute time frame. I'm going to make them in different colors, all right? Let's change the colors of those. Let's change the colors to, I'm going to say something else to you, but I'm giving it to you like this with the technical maths, yeah? This, and this, okay? Now, I would have been out of this trade. Why? Because I don't want to hold my trade overnight, all right? So by the time we're getting to these type of times, this is 9, 10, 11 o'clock. I don't really want to hold this trade overnight. Why? Because I'm killing it. I've made all of this profit. Why should I hold it overnight? So when I go to sleep, I wake up in the morning and the price is down here. Like, I don't need to do that. Remember as well, when you at nighttime, your spread, the cost of you getting into a trade opens up, your spread, okay? So that's another thing that can stop you out quickly. You can even add slippage. But on a 5-minute time frame, there is nothing here. This is making, if I was to give these letters, it would be HH, HL, higher high, higher low, higher high, higher low, equal high. We're thinking about it, higher low, higher high, higher low, equal high, higher low, higher high, higher low, higher high, higher. Well, at no point has that market done this. Lower low, lower high. Not once in that entire journey. So don't ask me, when should you get out of a trade? Get out of a trade when the trade says, I'm ready to get out of the trade. I'm ready to stop running in this direction. Our 5-minute time frame gives you a little bit of, it gives a little bit of margin that you're not going to take all the profit. And what do I mean by that? I mean that this trade goes from here all the way up into here. If you wait for a 5-minute change of character, indicating correcting and continuing opposite direction, well, you're going to lose some of this profit. You are. You're not going to get out right at the tip. Yeah? You're going to lose some. Because ultimately, you're waiting for the market to tell you differently. You could, if you was really excited about the amount of profits you made, get a bit more sensitive to this price action and drop your time frame. All right. So on a 3-minute time frame here, again, there's still nothing in here showing me the market breaking and then breaking again against me. However, over here, we can see how this market gives us a little bit more information here as it breaks down here, then breaks up here, then closes down here. You could have closed here but you wouldn't know because you're sleeping here, majority of people. Yeah, you're sleeping between the hours of probably 1 a.m. and 4 a.m. So that's why I said in this instance, you're good either way because you would have got out of this trade happy over the moon. Just said, you know what, I'm great. It's 9 o'clock. It's 10 o'clock. I'm closing my trade here with loads of profits. Okay, you wouldn't have to be like, I'm just holding on forever and ever and ever. Amen. Yeah, you're not. But this is how even here, have a look at this. Someone's saying, no, Jay, but look at these big red candles over here. Even here, this push down here doesn't break any structure. The structure's here. This, even though this market started pushing to hell, like, oh my gosh, which we can see what he did, came and sat on a previous battlefield. Yeah, came and sat on a previous battlefield. Even in that instance, the market didn't break structure. So that's how you get out of your trade. You get out of your trade when the market say to you, I'm ready to stop doing this and I'm going to do something else. Let's go and look on our 1 minute time frame. Let's see if the 1 minute gives us any concerns. Even the 1 minute. Here you go. So even better. You're very concerned. Even the 1 minute doesn't give you any reason to get out of the trade. Have a look here. Here is a little bit of structure here. The market doesn't close below here. It wicks below here. All right. Doesn't close below this level. It wicks below this level, which is not a closure. It actually closed up here. Okay. And then the market didn't make a correction and continuation. It just started coming up. This is the 1 minute time frame. On the 1 minute time frame, yeah, we did close below this structure here, this little level in here. But the market corrects, doesn't continue, keeps pushing up. So even on a 1 minute time frame, it's giving you no reason to get out. Doesn't break this structure. Even on a 1 minute time frame, I wouldn't personally be on a 1 minute time frame if I want this trade to ride. I'd be on a 1 minute time frame if I want an excuse to close my trade. If I want an excuse to get out of the trade, like I'm just like, listen, wow, I'm in so much profits. I just want an excuse to take my money. But then maybe I'll drop to my 1 minute time frame if I'm in the trade and it's running in my direction. Yeah. But the reality is that 5 minute, or even if you say 3 minute, because you want to be a little bit more sensitive to what's going on, is a good enough time frame for you to say, listen, I would not be out of this trade. But this entire journey, I got out of this trade because I had places to go and it was getting late. I closed my trade, but I wouldn't come out. The market hasn't told me. So people always ask me, Jay, but where do you go? Where do you take your trades to? I take my trades to structure, i.e., these points are points of interest. Look, this level in here, let's make it a nice bright blue. Okay, let's make it a nice bright blue over here. Over here. That is a point of interest. This is a previous swing high, a previous wick high in our London session. This is a point of interest. It is. Yeah. If I zoom out, let's just go to my daily. If I zoom out, every single wick high over here, above where I was, which I think is about here, is a point of interest. Why? Because they're daily highs. Yeah. They're all points of interest. This is on the daily. This is every single candle you see is 24 hours in time. So these daily high, in fact, I tell you what, let me just get rid of them. Well, let me not get rid of them. Let me highlight them because they're all a bit thick. Okay, well, I can't highlight all of them. Now, I'm telling you, my trader view is moving mental today, all right? Anyway, all these blue highs, these blue lines are, points of interest. They're daily highs, okay? Okay, I missed some. Let's go back a bit. Let's go back a bit. These are all points of interest. Daily highs, daily highs, daily highs, daily highs. These are all points of interest. Obviously, the ones that are right at the top of a mountain, swing highs on the daily, are even more important, Yeah? Maybe even if you wanted to go there, yeah. These are less important than this one. Let's fade out the less important ones. All right. Ever so slightly less important. Yeah. Like this. Okay. So these are all points of interest. I don't know what the market's going to do there, but they're points of interest. Okay. We rip through this point of interest, took that daily high. Cool. We can get rid of that one. Yeah. We rip through these points of interest. It's fine because we do this on a completely different day. All these daily levels in here. Over here, this daily interest, we can see we've got a big old, at the moment, we've got a big old wick rejection. If you can't see because I've scribbled all over my charts, apologies, but like that. Yeah. At the moment, that's looking like a potential reversal candle. Obviously, it's only 8:30 in the day. We don't know. We don't know what it wants to do. But from a perspective of this outside candle yesterday, this can be an indication to us that the next candle wants to be another big bullish green outside candle. It can do. Normally, typically, we see it happen, but we know that the market first likes to come and close at least 50% of the imbalance from where the candle closed to where the new candle, opened. So maybe this candle came down here. I'm gonna try and hide my stuff. See that wick coming down and closing, the difference between the close and where this last wick was. This distance between here and here. This wick has come down here. There's a very high probability that maybe we want to have another big green massive candle today. It's not impossible. All right. Now let's knuckle down and see what's been going on. Now, what's been going on, once again, let's have a look at our session liquidity. So our session liquidity has had that there. I'm going to delete my charts because as soon as I click the button, all my scribbles going to come on the screen again. All right. I'm going to delete everything. All right. Click. Delete all 58 drawings. Well, all right. And let me go and hit this button here. And I'm going to make this say liquidity taken. Yeah. See over here? Liquidity taken. It took the liquidity of Asian session, and we are having a reaction at the moment. Now, I'm a little bit concerned that reaction might not go all the way up in here. And I'm identifying, what have I identified by pulling out that Fibonacci? Let's go. What have I identified by pulling out the Fibonacci? What have I identified by just pulling out that Fibonacci, which is these tools with all of these lines here? Come on. Show me you're awake, that you're activated. Let's go. What have I identified by pulling out this Fibonacci from here to here? Come on, somebody knows. Come on. Nobody knows. Does nobody know? If you don't know, say you don't know, otherwise we're going to be here for the next 20 minutes. Does anybody know? No? Yes?
What was the question, sorry?
I said, what have I identified by pulling out this Fibonacci from this high to this low?
Oh, 50% of the range.
That's right. I've just pulled it out here to identify 50% of the Asian session range. Yeah, this is the Asian session here because the market has taken this liquidity here below the Asian session lows. But I want to see a point of interest. A point of interest is, does this market come back up here? Especially when I can see this consolidation that's sitting over here. Yeah, that consolidation that's sitting over here actually creates liquidity above that level. Okay, so above that level, there's some liquidity that's going to be sitting there. Okay, and for that reason, that market pushing back up above this area is not impossible because that would be it tapping back into 50% of the Asian session range. This here is a point of interest. This market, look down here. If I drop my time frame down here as this market pushed down here, let's have a look. And on 1 minute, it's not really showing me too much. Can't lie to you. On a 3 minute, maybe we've got a very ugly manipulation W in here. Maybe the market comes back in here a little piece. Maybe it pushes to here. But around this area, I'd like to see what happens. Is this market going to decide it wants to do this as the US dollar starts to gain strength? Or is this market going to be like, no, we want to go for another high, Jay. We just want to be bullish again. Okay. At the moment, I don't know, but we can see that liquidity has been taken. There's a very ugly manipulation W in here. And the market might decide to come and push back in to this area here. Okay, this area here is the imbalance that we can see how the market pushed up here with strength and speed. Boom, left a gap, an inefficiency. Maybe the market decides to tap back in there and then continue pushing up. Not impossible. Okay, it's not impossible. So at the moment, I'm wondering what is this going to do, but I don't want to just wonder and just constantly stare at this chart. I can also use GU. Remember, GU is the ugly cousin. Okay, so we can use GU. Just remove all of our charts here, all of our drawings. Sorry. So GU is different. All right, have a look. EU over here is taking Asian session lows. Can you see this? On a 3-minute time frame, EU is taking Asian session lows. GU has just taken kind of Asian session highs. Yeah. So once again, these cousins have had an argument, mate. These cousins are not moving the same. Yeah. They're slightly different in the way they're moving at the moment. Okay. And what that does is it can create, I'm going to go and show you on a different platform called Go Charting. All right, like it's already set up. It knows that I want to see EU. Yeah, because I'm bait like that. All right, so we've got EU over here, and over here I'm going to put GU, EU and GU, and I'm going to sync these charts. So I'm going to sync the cursors, the chart types, the intervals. Okay, and what we can see over here, if I go to my 5-minute time frame, you can see the difference. Have a look at the difference. The difference is that this market on a 5-minute time frame made this high and ultimately is down here like this. Let me change that color to a brighter, more shocking color, yellow. Okay. But in the same place, the chart here made this high and then a higher high over here. That is what we call divergence. Okay. The market's doing two different things. Okay. We're also getting some other divergence in places, makes you complain. Now, divergence is complicated. It's a bit like it's just one added confluence. Now, if you want to know more about divergence, let me show you how you educate yourself. All right. You talk to Bobby Scoogle, all right, and you can just put divergence patterns Forex. How easy that was. Okay. We go to images. Let's find a nice one. I don't know. Let's just pick this one in. So here it's showing you that here this market's making. Let's look at this one. Let's make it big. Oops. Let's make it big. Let's open that image in a new tab. It's showing you here. This market here, let's imagine that this is using the MACD. I don't want it to be saying MACD on the screen to add another complexity. Let's go and find a different one. Let's just find the patterns. I don't want it saying MACD on it. It's the same stuff, to be fair, but I don't want it saying MACD. You utilize MACD. You can use divergence and the idea, the concept of divergence. You also use in the MACD. Okay, but you can also do it using pairs that are complementary. All right. Looking for a good image here. Just got lots of them. It's just, doesn't really matter. But the open image here that you can see, who's using the complementary pairs. This is showing us when the price here above price is making higher highs, but the other complementary pair is making a high and a lower high. Because it's above price, it's bearish. It's a bearish pattern, and they're calling it regular divergence. Whatever names they want to call it, good for them. This mark price here is underneath price. You can see the market's making lower lows, but in the other pair, or if you was using MACD, it's making lows and then higher lows. Well, then that's bullish regular divergence. Yeah. if the market was making there, we can see this is making lower highs, and this is making higher highs. It's hidden divergence, still bearish on the bearish side. And the same here, underneath price, still bullish, same stuff I've been telling you. And exaggerated divergence is one of the markets making equal highs and one of the markets making lower highs, bearish pattern. Here, equal lows and higher lows, bullish. Now look, guys, I don't trade patterns in isolation. Like, oh, look, there's a bearish pattern, I'm buying. I don't trade anything in isolation. There is no one strategy, one thing that you see, and that's the be all and end all. It doesn't work like that. Do you understand what I'm saying? It's just an added confluence, meaning it's just an added bit of information that you can go, okay, interesting. Yeah. So when I'm seeing this happening over here, I'm thinking to myself, maybe there's going to be some bearish energy coming in here, especially if I'm looking at it and thinking to myself that maybe the market's looking like it might be bearish. Maybe. Look, GU's just taking liquidity from over here. And if I zoom in here, it's starting to do something.
Front door.
Yeah, it's starting to make a little something. Nothing I don't really like it on a 3-minute time frame. It's not doing anything. On a 5-minute time frame, not really nothing I'm excited about. On a 1-minute time frame, maybe here we can see a lovely manipulation M. Boom, 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 boom. The market correcting and continuing back down here. So maybe it's already played out. Maybe for GU. Let me look at it on the candles. Maybe. Yeah, maybe there's this scenario happening right now in GU. Maybe on a 1-minute time frame, it's a bit risky, but I'm not only just look at all the different things I can look at. So I've looked at EU. EU and GU are supposed to be cousins, but I looked at GU and GU is giving me different information, giving me more information, more to work from. But I also want to look at Dixie. I'm wondering what's Dixie doing, because the Dixie powers both of them. It's the source. And the market definitely came down into this imbalance. But at the moment, una momento, the market came and took some liquidity from above this Asian session high. And then it's actually made a retracement back down into a little bit below the 50% level, more say into the 618 to the 786, between the 618 and the 786 of this Fibonacci. And right now, the question is this market going to have a bullish reaction from here, which we're seeing some sort of nonsense happening? All right, if I go to my 1-minute time frame, we're seeing some sort of scribbles happening in this direction. Let's go look in the 3-minute time frame. Is the market going to have a bullish reaction and go, or is the market going to have a bearish reaction and fall out of it? That's going to give me the information of whether or not that GU and EU are going to get bullish or bearish. But what I'm going to say to you today, guys, and the reason why we're seeing some of this divergence and some of this madness is because of this. Have a look. Bloodbath. Yeah. Absolute bloodbath today. Yeah. Guindo's speech is happening in the next 1 minute. His speech is happening. We've got manufacturing PMI happening. We've got unemployment change happening. We've got all types of things happening all day. Bloodbath. Remember, I've got this filter to just show me high impact news. And I'm seeing 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, at least 20 bits of high impact news today, which can hint to me that there might be some volatility. We've got Jerome Powell speaking later at 2:30. We've got all type of things happening today. So when I'm seeing GU and EU doing a madness, I'm seeing the Dixie all the way down here in the dirt, really, really discounted, coming and closing the imbalance I identified. Then I'm seeing all of this madness that's potentially happening today. Yeah. And on Thursday, looks like an active day. Maybe that's going to be the catalyst to give this US dollar some strength. Yeah, look, we've got 23 seconds before ECB window speech starts. We can see it counting down. That isn't necessarily a consensus, yeah, in regards to what they think the price is going to be, but what is he going to say? Now, we're not necessarily watching this window speech, but if we really wanted to, we can use the resources that are available to us in 2025, okay, which is normally at the end of your wrist in the form of a phone, yeah? And if we wanted to, we could go and more than likely more than likely watch his speech. Yeah, we could more than likely go and watch his speech. Maybe not. Don't know if it's live. Okay, maybe not. Maybe somewhere else or something, maybe a CNN or something like that. If we really wanted to, we don't really want to. Yeah, I know you don't. We're mostly interested in technicals and getting them out of the market. Okay. So we don't really want to watch it. But the whole point is that we have to be aware that he's speaking. You've got to be aware that hello. Oh, there you go. All right. Can you see him there? Guindo. Look at this Jack guy. Face like I slapped ass. Yeah, but look at him. We're waiting for him. See what he's got to say. And if we want, we can sit here and listen live to listen to the sentiment of what he's got to say. I don't necessarily, it's not my cup of tea. It's not something that I am fully interested in when it comes to the market. Sitting and listen to this guy's speech. I just don't like his face personally. All right. But I'm aware that what he says and what he says may have an impact, but I'm also aware there's a lot of other high impact news. So what does that mean for my trading? That means I'm going to trade cautiously. It means I'm not going to put my life savings on the line straight away. It means I'm going to understand that this market, even if it wants to go in one direction, might spike in another direction. That's what it means to me, red folder news. Okay? Now, like I said to you, this market here, which is Euro USD, has taken some liquidity from here. I'm concerned to see what it does at the 50% mark. But when I see GU, the fact that it's taking liquidity from above, I'm waiting for GU to show me some change of character, some indication, correction, and continuation. Yeah? Yeah, what did I just say? I said indication. Let me try and do this as a nice drawing. So I know I normally do scribbles. Just try and do it nicely so you guys can understand what I'm talking about. All right? This is the market. The market's making higher highs and higher lows and higher highs. It's doing its thing. Now, I'm waiting for the market to do this. I want to see the market indicate I don't want to see the markets correct. And then I don't want to see the markets continue. That's a confirmation pattern for me. And then you can, if you wanted to, you could put in a million different things of what this is doing. This here, call it what you want. It doesn't matter. You just have to understand what a confirmation looks like. People are going to call this. Look, to really mess you up, they're going to just write this on the character or on the chart. Yeah. Just to really make out that they're really clever, they're going to write, CHOC. I've seen it written like this sometimes. Look, just to really make you think that they're geniuses and they're doing something massive. I've seen them do stuff like this. Put a little dot in there, make you feel just, oh, something's really going on over here. A change of character. Because the market was previously making, have a look, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And then it made a lower low. It broke this level in here and had a change of character. Yeah? It's like you're a nice guy, you're a nice guy, you're a nice guy. All of a sudden, you just started shouting at the woman behind the till over here. And I'm like, whoa, what happened? So I give you an opportunity to correct that behavior. You make a correction. I'll give you an opportunity to correct that behavior. I'm like, right, normally, Darren's a nice guy, but maybe he's just having a bad day. Let's give him an opportunity. We let him go back to the bar and say sorry or whatever it may be. He goes back to the bar. Then he continues being rude. He continues. He indicates, I say, whoa, what's going on with Darren? I give an opportunity for him to correct his behavior. Thinking to myself, that's just a one-off. But then he continues being rude. So now, Darren is no longer a nice guy. Have a look at this nice guy that Darren was before. He was a really nice guy. We liked him. We wanted to invite him around for dinner. Thought he's a really nice guy over here. But all of a sudden, we took him out. And he's had a little bit of drink. And now, Darren's no longer a nice guy. Darren's some other dude. Yeah? He had a change of character, and now Darren is some other dude. He was bullish. Yeah, everything's going good. He's such a lovely guy. Then he had a change of character. He indicated, he corrected, he continued. He's not a lovely guy no more. I can only deal with Darren based upon his last, you're only as good as your last successes, mate. I can't say, yeah, well, once upon a time he was really nice, but now he's punching up the woman at the bar. I'm just going to override that and remember 3 years ago when he was a nice guy. Now I've got to take what you did last. And I'll be like, Darren, what are you on? You're bearish now. And he's like, yeah, I'm bearish, mate. I've done with being a nice guy. I'm going down here. I'm bearish. That's what we wait for. And as a coincidence, in our alphabet, we have a letter called M. Yeah? If we had a different alphabet that didn't have an M, I wouldn't be able to use this example. We have a letter called M. And this is a manipulation M, not a McDonald's M like this. This is a McDonald's M. For all the people that are still eating McDonald's, please stop. Yeah? That's a McDonald's M. We don't want a McDonald's M. We want a manipulation M where the right shoulder is higher than the left shoulder. That's what we want. That's what we're looking for. We're looking for the green one, not necessarily this one here. So the green one is what we're looking for, and the green one has appeared right here. What a coinkydink. And vice versa, if this was flipped on its head, we'd be looking for a manipulation W. Guys, I'm giving you the source. I'm giving you the source. I'm giving you the source for free. Take the source, rub it all over your face. Yeah? Understand that this is the building blocks of this is the structure of any market, of any decision you want to make. And today we're going to do that, because today we're going to tap into what I believe and what I would like every single person here to do. I'm going to put a link in the group, which is going to be a link to a Hargreaves and Lansdown account. Hargreaves and Lansdown account is an account that you can invest in the markets. Okay? I'm going to put a link in there. Hargreaves Lansdown. Yeah, here they are. Hargreaves Lansdown Limited is a British financial service company based in Bristol, blah, 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 blah. Is an award-winning investment and active savings service that you can basically you can invest in the markets. Those companies, your Apples, your Teslas, your Nvidias, your ETFs. Does anybody know what an ETF is? Does anybody know what an ETF is?
Exchange traded fund.
I like the sound of it. I like the way you said that. Sounded professional. And we're gonna see what Google's explanation of what an ETF is. Here we go.
An ETF, or exchange traded fund, is a type of investment fund that owns a collection of assets like stocks or bonds, and is traded on a stock exchange like an individual stock. Essentially, it's a basket of investments that can be bought and sold throughout the day.
So, in a nutshell, an ETF is a basket of different companies. So, instead of you turning around and saying, okay, I'm going to use a very crude example. Excuse me, sister, for my crude example. Instead of you going to the club and going, oh yeah, I'm going, there's a group of girls and you're trying to pick the one out of the group that's going to come home with you. There's 8 of them. You're trying to pick the one. You ain't got time to, build a long relationship. Like, you're here for a good time, not a long time. Yeah, you want to have a great night tonight. You're trying to pick the one. Eeny, meeny, miny, mo. You don't know which one is. Yeah, she looks good, but she got a bad attitude. She looks horrible, but she's definitely coming home with you. This one over there, she's not going anywhere without her cousin. You just don't really know. So I tell you what you do if you're clever. You say, guys, it's a party back at mine's. All of you come. Why don't you all come? Party back in the penthouse. Yeah, penthouse. Yeah, we've got 360 views. I've got, I've got a water, a fountain. My apartment's crazy. We've got the after party at mine's, and you bring them all back. And whilst you're there, you'll work out which one of them you're going to be able to take upstairs. Okay? Because if you was trying to pick one of these companies, you might make a mistake. You don't know what the next big AI company is going to be unless you're doing extensive research. You don't know. You can try, but if you put your life savings into that one company, maybe it doesn't. Maybe it's a duck and it goes like that. If we put them all into a basket and one of those companies blow up, it doesn't even matter that the other companies didn't blow up, because that one will drag the bunch. Yeah? That one will drag the bunch, so you could still possibly score. You could still possibly win. And that's what a basket of good does. It hedges your bets. Now, you might not get as much of a return as if you invested in that one company, but if you don't have the credentials, the ability, the information to pick that one company, an ETF is a low risk solution to saying I'm investing in AI, I'm investing in tech, I'm investing in defense, I'm investing in pharmaceuticals. Because instead of you picking the one out of the 10,000 pharmaceutical companies that are out in the planet, you just got a basket of some of the most, and that company, i.e. a Hargrave and Lansdowne, they will put together a basket for you. You're leaving it on their shoulders to put together a good basket. Yeah, where all those nerds with the corduroy pants and the white socks and the shoes with Velcro, they say, listen, we don't know for sure, but we're going to put 20 of the best in a basket. And you can invest into that basket. Now, the reason why this is important right now, guys, why I think it's very, very important, because I believe that right now, today, yeah, the 1st of July, 2025 is a moment in time. Yeah, not just the today itself, but this period where we have war, this period where we have AI, this period where we have BRICS, yeah, this period where we have Africa rising up with man like Captain, I always spell his name terrible. Is it like this? No. Captain Traore. Not the rugby player. Ibrahim Traore. Yeah? Showing Africa that they can break free from the chains of USA and other global colonists that have been raping Africa for so long. There is a shift that is happening in the world at the moment, meaning that emerging markets, there are emerging markets that we can get involved in. Just like your granddad or your uncle's friend, whoever it may be, that invested in a little company called Google once upon a time when the internet, some weird creation called the internet popped up. And he was like, oh, this is quite clever. We can put a directory. We can put the yellow pages on everyone's computer so that when I'm going somewhere, I don't need to go and draw for this massive yellow book, which, you know, gets wet, is heavy. I've got to find somewhere to store it. I can't really walk with it. They're going to put the yellow pages on the computer that I can access from this thing they call the internet. This sounds like a good idea. He invested some money in this, in the internet. Maybe he heard of a company called AOL or Yahoo or Google. He's walking in, or he's driving around in his Ferrari like he knows everything. Oh yeah, I'm an investor. Obviously, I made some savvy investments back in the day. No, you didn't. There was a moment in time that you took advantage of. Just like if it was the turn of the Iron Age or the Industrial Age or whatever it may be. Now is a moment in time. That moment in time is AI. That moment in time is the emerging markets. And if right now we can turn around and say, you know what? I tell you what, and it doesn't matter how much money you have to invest, because that's what I was going to say, I don't have money to invest. Well, you have something, right? You have a tenner, 50 quid. You just bought a brand new pair of Jordans for 180 quid. Yeah? You're taking your family on holiday for $3,000 for a week. Yeah? Only to come back and have to work your ass off to make another $3,000 to take them somewhere else. How about turning around and going, you know what? I now want to start my journey, because now is a moment in time. It's like property, guys. I've done property for the last 20 years plus. For those of you who don't know what my core is, yeah? Property. But the reality is this. My mum bought her home for something like, I don't know, 40, 50 grand. Yeah? But that was a moment in time, because she could buy a house for a certain amount of multiples of her earnings. And she could probably afford that house within a couple of years of her annual wage. That was a moment in time. I can't do anything about the fact that I was born at a certain time, whereby for me to buy a house, I'm going to need 6 times my own, 7 times my own, whatever the multiple is, to the point where now buying a property is predominantly, unless you got, bank of mummy and daddy that have helped you out, or you're on a wage which is over the average, abnormal wage, is really set up for you to buy a property with a partner and have 2 wages, killing yourself, scraping, eating dust and crackers, and then put all of that money into a deposit to go and buy a house where you've grown up, that your mum bought for 40 grand, that now your same mum's house is worth 600, 700 grand, and you earn a wage of 50 grand a year. So how are you going to get a 700 grand mortgage by yourself? Unfortunately, you can't do anything about that. If you was born at a certain time, you could have been a squirrel and invested in property and done well. Because the markets were just going up and up and up and up and up and up, and they started at a point whereby prices were achievable. They started at a point where they was giving 110 grand mortgages, 110% mortgages, loan to value, 120% loan to value. What does that mean? That means they're giving the money for the house and some money on top. You could have been anybody, and now you're turning around going, oh yeah, obviously I'm an investor, I'm clever, I'm a genius. I bought lots of properties in the past, and blah, 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 blah. And that's the reason why I drive, this Porsche, and we've got our £2 million house. It was a moment in time, it was an accident. It was a fluke. It was a fluke. Guys, let me tell you something about this energy, yeah? And I am deviating from what we're talking about, the trade. Let's go and have a little glimpse and see what's going on. All right. We're seeing our USD losing some strength, on our GU continue to push up. Okay. But listen, let me tell you something. There's a lot of people out here in the world who have accidents happen, yeah, and pretend that it's been achieved by genius, by how smart they are, how, blah, 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 but it was pure luck. Yeah. I actually saw something on social media, and they spoke about I don't know if anybody's seen this, probably on YouTube. There's an experiment that they conducted about Monopoly. They basically had a Monopoly board, and they gave one half, everyone flipped a coin. This is it. In fact, we'll just watch it for 4 minutes and 20 seconds. Yeah, we'll watch it for 4 minutes, 20 seconds. And it's very, very interesting, but it relates to a lot of things. It relates to property. Yeah, when your uncle, who's a property tycoon, and he's walking around, he thinks he's so great and so intelligent, but the reality is it's just a moment in time, and he just accidentally bought some properties, and then before you know it, he realized that it was just booming and booming. But it was a moment in time that he took advantage of. Yes, he had to have some money to buy the properties. That's why they say stay ready so you don't have to get ready. Okay. But I'm saying to you right now, crypto, AI, all these type of things is a moment in time that we're going to look back on when you're 50, 60, 70 years old, and you're going to be like, I was there for that. I was there when that war happened. I was there when they started bombing Iran, and possibly, hopefully not, World War III was, on the brink or started. It's a moment in time that, unfortunately or fortunately, however you look at it, we have to try and take advantage of. Have a look at this. It's very, very interesting.
Can I just say something?
Of course you can, Nick.
You touched on something yesterday with that video you played. So with with AI right now, yeah, they're saying the money is not in the AI startup so much. It's in the companies providing the computing power. And you heard in the video you played saying, they're going to have to build loads of data centers in order to deal with basically AI's requirements. That's where the investments kind of lie. I read up on a little something about that. So, and also going back to your ETFs, quite amazing that all the ETFs are being approved for crypto. XRP coming out soon because Trump's real crypto friendly, and they've already done the Bitcoin, but I think Ethereum coming through, and then XRP and other altcoins. So you're right, this is an amazing point of time for us.
Nick, I love your conversation, Nick. I love what you're saying to me. I love everything you just said to me. Because the reality is this, okay? I want to explain it in a couple of ways, and I have done a few times. It's like this. This is Apple, yeah? For argument's sake, let's just delete everything off of Apple. This is Apple. Now, Apple is a solid company, guys, okay? It's a solid company. What do I mean by that? If you was to go and take the time to look at their balance sheet, of their assets, for what they're doing. Apple are in a position whereby they've got, real estate, they've got this, they've got that, they've got shops on every high street, they've got they've got a strong brand. Their brand is strong. They have consumer loyalty. They have a lot of things going on for them. All right. However, if I'm trying to get rich, I've got to ask myself, because even right now is a good time to buy Apple, based upon this range I've just drawn here. Look, this isn't my opinion. This is me showing you the facts on the screen. If based upon the trend of how Apple's been trending, we are in a discount. It's a good time to buy Apple, but you've got to ask yourself, even if Apple gets back to all-time highs, it's only moving from 205.91 to 200, and let's just say 50. Okay, so let's just say 25% increase. Yeah, 25% increase. Okay, still good. Increase your £100 to £125. All right. Now, we've got to understand something that they call market cap. Okay, as in what that means in an idiot's guide is, let's just imagine that there are 1 million people or 100 people in the world, which there's not, but we understand there is. Now, if 98 of them already have Apple devices, the question is, how much more money can Apple really make in this market? How much more ceiling room has this market got? That's why you hear companies come up with new products. If an Apple now came out with some next up Apple shoes, that you put the shoes on your foot now and it makes your foot cool and does this and makes you run faster and jump higher, maybe their market now opens up, because now it's open up to shoes, the shoe industry. People that want shoes, footwear. So even though I've got an Android phone, I want some Apple shoes because these shoes are crazy. So it might increase their market cap, their potential. Yeah. So therefore, if I'm thinking to myself, right, wait a minute, now Apple's come out with this whole clothing line of new products. I'm thinking to myself that Apple stocks could soar, get up here to 600, 700, 1,000, 800, keep going, 1,800, because it's new market it's taking, it's new territory. Yeah. Now, if that's not the case, and I've only got a certain amount of money, because remember, if I'm investing in stocks, £100 stock is £100 stock. Man, no one's going to give me £500 stock for my £100 stock, £100 worth of money. They're going to give me, it's 1 for 1 when you're investing in a stock. Trading is different. We trade with leverage. But when you're investing into something, your £1 is going to buy you £1 of that thing that you're trying to buy. Okay. So on that basis, what Nick just said was fantastic, because let's just say AI, let's just say NVIDIA, one of the big boys, yeah, big chip developer, has gone parabolic with their growth. But the question you got to ask for NVIDIA is, how much more ceiling room is in NVIDIA? Because maybe NVIDIA gets up to 200. That's cool. You invested at 140 to 200. What's that? Maybe like a 40% increase. Still great. Still good, good returns. It's even better if you put in 10 million. That'd be good. If you're going to put in your local money, maybe what might be great for you to do is do a little bit of research and find out what company. Is there a small company that NVIDIA are just doing a new deal with that provide the little bits of silicone that goes into their chips? This little company over here, JP Silicone, Incorporated, and we've just signed a contract with NVIDIA to supply their silicone because they need more silicone or they need more of X material. Because this company might be very cheap at the moment. It might be at a place where my little £100 buys 100 shares. Because once upon a time, look, NVIDIA was down here, look, at 10 cents a share at one point, at $1, $2, $3 a share. So is there an opportunity for us to find these type of companies that these are higher risk, but they are higher reward? So if I put my money in Coca-Cola, more than likely Coca-Cola is not going to disappear, even though it doesn't help us whatsoever. It's killing the youth, yeah? But more than likely, Coca-Cola is not going to disappear off the face of the earth. There's a very high possibility it doesn't, yeah? They've got so much infrastructure, so much footing. Their teeth is so deep into the world, it's difficult just to delete them. So this is seen as more of a low risk investment. You know, it's not necessarily, or maybe not Coca-Cola the best example. Yeah. I don't even know if this is the right one anyway. There's so many ticker symbols. But, you know, it's seen as a low risk investment. But it's going to give you lower risk, but also lower returns. So what I would advise everybody to do is to do this. You ready? Ready for my opinion? This is not financial advice. Is I take my money. This is my money. It doesn't matter what that number is. Everyone's number is going to be different. And I would divvy up my money. And I want to put some money into some high risk, or some low risk investments. Maybe this is going to be my ETF. And maybe that's going to be the larger percentage of the money. It depends, though. It depends where you are in life. If you're already, you know, you're sitting on a little bit of a nest egg, you got a few $100,000, or you just sold your house, you got £1,000,000, whatever it may be, and you're looking at it like, look, I want to get it, because all you're trying to do is get a better return than the bank, right? You don't leave your, look, let's imagine you just sold the house, you got £250,000, yeah, in profit after you've bought a new house, done what you've done, you got £250,000. If you leave it in the bank, even if some high risk dud investment, I don't know, some ISA, and they say, yeah, we're going to give you 5% annually on your money. Okay. But you can't touch it for 3 years or 4 years. Well, bit of restrictions there. You might need your 250 before 3 years. You don't want to pay a penalty because you're locked in for 3 years. But let's imagine that. All you're trying to do is you're looking for an ETF that beats that. Historically, the S&P 500 has beaten that. Historically, we've been getting 0.5% in some savings account, especially over COVID times, etc. When things were very, you know, interest rates were very, very low. You're getting nothing to put your money in the bank. So why would you have your money in the bank? So you're essentially just looking for an ETF that does better than the money that you may get by putting it, you know, in the bank. So let's imagine this ETF turns around and says that, you know, blah, 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 we predict, you know, obviously they will give you the disclaimer that nothing, you know, is for sure, and you could lose all your money and blah, 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 blah. They will give you that disclaimer, okay, that all of these things are going on. But the reality is that you're just looking for an ETF that says, yeah, we believe that we can do 12% this year. Well, that's nearly 120% more than this. Yeah. So ultimately, or 140% more than this. So ultimately, you're like, okay, this is better placement. So that might be your low risk ETF. Then you want to turn around and you want to get maybe some medium risk stuff. Some stuff whereby, look, you've done a little bit of research now. Do you know what I mean? And you've seen a couple of things, whatever it may be. Then you're going to put maybe some money into some higher risk areas. Maybe your lower risk stuff's going to be stuff like, as well, you know, your goals also going to be a nice place to bury some money. Yeah. And then you want some higher risk stuff. And the higher risk stuff might be that you did do some research and you think that you've narrowed down the company is going to be providing that silicone, for example, to these companies. You've narrowed it down to these 5 companies here or these 3 companies here. And you're willing to take a percentage. Just imagine that this whole bucket was 10K. Yeah. Just imagine that you've put, 5K over here. Safe. You've put, 3K, kind of medium, kind of safe, kind of ish, you know what I mean? Then you've got these high risk investments here that you've got another 2K. I'm willing to put 2K to these high risk. This 2K is you going to be going for glory. Yeah. This 2K is that you're going to come back and one of these companies are going to do 100x or 1,000x or 10x, or maybe this is some crypto. Or maybe like what Nick was talking about, that, we've seen Ripple do certain things, but, we understand that if Ripple is going to be able to do that, the data center is going to need water. The data centers are going to, what water companies are in that area that are undervalued, that maybe that you can invest in from early in this undervalued place. And no one saw it coming because they figured to themselves, this is a water company, but you saw it coming because you're like, if a data center comes over here, they're going to need fresh, what did they say? They said they need fresh water. They can't use any other water. Because the water for calcifying the systems and doing certain things. So therefore, that water company is going to do really well. Maybe the guy who supplies the piping for the water company to take the water to the data centers, his company is going to do very well. Can you find him or her? And what that company is for and invest in them, because they're going to be flying under the radar. They're not your Nvidias. They're not your Apples. They're a little copper piping company coming out of Texas that have a relationship with the water company to supply piping to wherever it may go, and you decided to put your £1,000 or £500 into them on the basis that as soon as this data center gets approved, because you've done the research and you know that in August they're going for an approval process and they should get it based upon X, Y, and Z, that their share price is going to jump from, you know, $1.50 a share to $40 a share. Huge returns, guys. I'm just saying, and I'm talking generally. Yeah, we've had other sessions before and we've got a little bit more specific, but I believe that now is a moment in time. Yeah, and you can just look around you guys right now. If we go to war, you know the reason why this country loves this country, America loves going to war. I mean, it's big bread. If we go to war, we need bullets, we need missiles. Let's ask my friend. Let's pull my friend up. Say good morning to him first. All right. I want you guys to all be polite whenever my friend appears. Good morning, chat. Yeah. Me and chat have a great relationship. Look at that. Good morning, JP. What do you need help with today? Jesus. Chat. How much does one missile, I don't even know what they're called. I was going to call like a tomahawk or something like that. Oh, listen, what was one? Is it tomahawk? Do we know how to spell tomahawk? I'm guessing it's kind of like Tom, Ma. Just trying to see tomahawk. I don't know. Tomahawk.
I think it's T-O-M-B.
Yeah, someone's going to Toma, T-O-M-A, and then hawk. Okay, let's go. T-O-M-A, hawk missile cost on average. One Tomahawk cruise missile costs approximately 1.5 million to 2 million USD per unit. Let me just say it again, because someone didn't think it was that expensive. I know they didn't. Let's go. Let's play it out loud so we can hear.
One Tomahawk cruise missile costs approximately $1.5 million to $2 million US per unit. The exact cost depends on variant type, e.g., Block 4 or the newer Block V.
Block V.
Quantity ordered, bulk purchases can lower
Right, you can get a discount if you buy them on bulk.
Upgrades or payload changes.
Well, you know, but you can get a discount if you buy them on bulk, like 2 for the price of 1, or you get like some tokens or whatever it may be. But just understand that if they decide to go and say, boom, we're going to go to war, US dollar or the US, they got to start raising 1.5 million per Tomahawk missile. Where do you think that money comes from? It comes from you. Comes from us, comes from taxes, comes from let's divert the money from schools and let's divert £1 billion into here because £1 billion will buy us some good Tomahawk missiles. So if that is the case, and you've just invested in a company that provides the little, I don't know, screws that go up the side of the Tomahawk missile, they're going to do very well. They're going to make some money whenever there's a war. If you really think about it, if you're in the defense business and there's no wars, you ain't happy. You are praying for a war. You're like, oh my gosh, we got missiles sitting here all day long. No one ain't buying them. Come on, let's stir up a little trouble. Let's just go over there and poke Iran. Yeah? Let's just poke China with a little bit. Come on, we need a little bit of business going on. Think about it. This is the oxymoron and the conflict of Western society, of capitalist society. It's like doctors. If I was a pharmaceutical company, why would I ever give you the cure for cancer or the cure for anything? Somebody give me one reason why I'd give you the cure. Just one. What, I want to give you the cure to put myself out of business so that you never come back? Why would I do that? Why would I give you the cure if I could give you these 3 pills twice a day for the rest of your life? Preach. I know somebody's hearing me. And that's why when I talk to people and I say certain things like, you should change your diet, think about looking at certain things, blah, 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 blah. We can cure all disease. People just think I'm just ranting, I'm raving, but let's just look at the maths of it. Let's just look at it. You're GlaxoSmithKline. Why would you, unless that cure for cancer is going to cost you 10 million quid? And I can say, you know what, screw it. Let's shut the business down. We don't want to do cancer treatments no more. So I tell you what we do. We'll give them the cure. We'll charge everyone 10 million quid. Yeah, because that's really the cost. That's really the value of that client, that customer over a lifetime. Yeah, of the government paying for these pills. Because when you go and get a little Medicaid, guys, even the vaccines. I watched the other day, every single vaccine, doctors get a percentage bonus given to them. Let me say that one more time. You see your kids that you're not too sure about vaccinating them. Every time a doctor vaccinates your kid, they get bonuses. Can be a percentage of their annual wage. It can be a per unit bonus. Why? Because this is business. This ain't got nothing to do with making you healthier or protecting your kids from XYZ. It's what can I sell you? So if you just look at the maths of these things, there's no reason why a pharmaceutical company ever gives you the pills to cure you. So when you're out here, you're like, oh, I've got headaches, or my child's on this, the medication's doing really well. You're just subscribing to giving them medication forever. If that's what you want to do, that's fine. It's your kids, it's your parents, it's your whoever it may be. But ultimately, your doctor is never going to treat the problem. He'll treat the symptoms. Oh, you got a headache, I'll give you something. You've got this problem with your stomach that gives you a headache, I'll give you something for your headaches. Yeah, just keep taking these anytime you feel a certain way. You need some more? Come back, we'll give you another box of them because each one of those boxes are 100 quid. So, and whether we like it or we don't like it, because this is the problem why some people hate the Western world, because it's one big oxymoron. Look at it. You've been on Instagram. You've seen every single day they're talking about this drink and that drink and McDonald's food and this food and that food. If you really think about it, if we lived in a world that cared, they'd never be allowed to serve these stuff. Just think about it. If we lived in a world that really cared about people, yeah, about, health, about us living our truest sense of who we're supposed to be, it would be illegal for them to serve you stuff that is not even food and just call it food. Or to change the wording so they don't actually call it food, but there's something else that you can eat if you want to eat. I saw a picture the other day. They said if you give this to your plants, which is water, why do you give these things to your kids, which is Lucasade, this, that, Coca-Cola, this sugary drinks? Bearing in mind, we know sugar is the only thing that causes all disease. But yet it's in everything we eat. So getting back off my rant, my point is this. You can either curl up in a ball, say Western world's crazy, it's nonsense, blah, 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 I'm going to become a monk. Or you can say, how can I benefit from this madness that the capitalist society creates? And unfortunately, if we go to war, you can benefit from finding out what companies benefit from war. If there are these AI that's been created that for all we know is going to lead to the destruction of everything, well, in between that time period, can you benefit from the companies that are going to grow because of this AI hysteria that is happening at the moment? This is how we have to look at things as investors. How we have to look at things at people that are empowered and understand the game of what is going on here in the Western world. And the joke is this: most people don't look at things like this. So you're already not the norm. You're already the minority. Because most people don't look at it. Most people are too worried about, oh my gosh, I got to take the kids football. I got to wake up and do this. Oh, we got to book our holiday to Benidorm at this point in time. They're so caught up in the fraff of life. They don't understand what's really happening behind the scenes. They don't understand that there is not enough beef cows around on the planet to supply the amount of beef burgers that McDonald's and Burger King or McDonald's, all these companies sell on a daily basis. So what is this? Can't be beef. You've heard about the chips that McDonald's needs a certain chip that they have to bleach. They have to use chemicals on the potatoes that are so toxic that they have to leave the potatoes for 6 weeks afterwards in a hanger so that the toxins can escape the potatoes before anyone can handle it. Because McDonald's want a nice bouquet of yellow chips, all the same shape. Like, how many times have you gone to see a chip and the chip's got a black mark on it? Very rarely, unless they burn it. We know. Just like you know what's good for you. Just like people know they shouldn't smoke. I heard the other day a new one about the vapes. They said the vaping is mad on your lungs. It leaves some mad residue because the liquid, which goes into a mist, a gas, a vapor, it then liquefies again in your lungs. And they're seeing in just 2 years, more kids, because there's kids that are vaping, having to get parts of their lungs removed. Just in the last 2, it must be longer than that, now maybe 2 to 4 years. And let me tell you the bigger conspiracy. Who do you think's behind the vaping companies? Because once upon a time, cigarette companies were allowed to make adverts on TV. Once upon a time, they used to be, oh, you have a Camel Light, Camel Lights are good for you. Smoking's cool. All your favorite actors and your favorite, actresses were doing cigarette adverts. They outlawed that. They made it illegal, and they made people have to put on the back of cigarette boxes what it does to your lungs. So if you see, there's no cigarette adverts, right? Because they're not allowed. But as soon as the vaping thing came in, all of a sudden, these cigarette companies was like, oh my goodness. Because in certain countries, I don't believe in this country, but they can advertise vapes. Vaping shops are everywhere. Have you noticed? Popping up everywhere, there's a vaping shop. I'm like, whoa, wow. Why wasn't there so many cigarette shops? But why did so many vaping shops come up from nowhere? Because now they've sensationalized smoking. And they haven't even got the information to know what vaping really does to your health for a long time. At least with cigarettes, we know. We've got data. We've got the data of what cigarettes do for the last 25 years, 50 years, 100 years to your lungs. Vaping, they don't have a clue. But the point is this. It's just business. So you've got to look at it like, okay, this vaping thing is going to be big. Why is it going to be big? Because all the cigarette companies are pumping money into it. Can I invest in this company here? This vaping company here? This is how our brains got to shift. If your brain shifts like this, you become an investor, you become a businessman, you see gaps in the market, like, wait a minute, if this happens and that happens, yeah? For example, guys, a lot of people know that AI is going to put them out of business. AI agents, which I can have a whole conversation with an agent verbally, not in the chat box, verbally. And it can, answer all my queries, my concerns, my FAQs. Well, what does that do to the world when, you can no longer be, you work for EE on the phone? Because EE are going to get rid of all the man that's sitting there that they want 30 grand a year, and they're going to invest in one AI agent. Now, your question you've asked yourself is, do I stay here as an EE employee waiting for my time when I'm going to get the sack? Or do I reskill? Do I find a gap in the market? I'm the person that sells EE, the AI agent. This is how your brain's got to work. I'm sorry. Sad but true. You've heard people talking about it right now. They said, bro, with AI rising, you might as well become a plumber. Because ultimately, them type of skills now become very, very valuable. Things that AI maybe can't do. Because I'm going to tell you something, AI can definitely answer them questions. AI can definitely, when I phone my doctors and the receptionist picks up and says absolutely nothing to me, but does donkey work, taking down some information. AI can definitely do that. Quicker, more efficient, 24 hours a day. For less money, doesn't get sick, doesn't get pregnant, doesn't do anything like that. So ultimately, if you can do the math on it, that job's going to go. If I can see the math on it, just like I'm looking at these charts and I can see there's liquidity here, I can see this is in the discount, I can see. So if you can do the math on different things in regards to our Western world, we can start investing in certain places. We can start having suggestions where you're going to wake up in the morning, Nick's going to say, Jay, I've been looking at this company, and the reason why I think this is a good company is because of this. And we can all sit there as a community and do the math and go, you might be right there, bro. You might be right. Because if it does come to the UK and this happens and that happens and this happens, people are going to have to buy these things to keep themselves safe. So yes, I agree. Who made the money in the gold rush? Who made money in the gold rush? Who made money in the gold rush?
Well,
The person who sold the spades.
That's right. The person who sold the buckets and the shovels, bro. He was like, listen, I could go up down to the stream trying to find little bits of gold. I could do that, but I don't know, man. That's a bit hit and miss. But I tell you what, I've just clocked. If everyone's so hysteric, the hysteria is here about it might be gold in them hair hills, yeah, they're going to need a shovel and a bucket. He's a genius. He's like, there ain't you coming up to the house for this area. My accents are terrible, I'm sorry. Yeah? Ain't you coming up to the house for this area go? And I was like, I'm cool, bro. I'm gonna stay down here where it's cool, but I've got mad buckets. What size do you need? I've got shovels and pickaxes. Furthermore, if you get it free, I'll give you a discount. And I'm like, okay, man, JP's silly, man. He ain't coming for this gold. He's just out here selling buckets for $2. He may pay. So we have to think like this. And sometimes it might sound overwhelming to think in this way, yeah? But it's not. It's actually quite common sense. It's actually like most of us can sit here and look at the world and think to ourselves, for example, this. Let's do another example, yeah? Just off the top of our head, Gaza has been absolutely smashed to bits. I think we can all admit that, you know, the genocide that's happened, the way they smashed it to pieces. But let me tell you something, whoever's going to get that contract to rebuild Gaza, they're going to do okay. Whoever's the road company that's going to come through and start building the new roads, they're going to do okay. Just like, have you ever asked yourself, who I always ask myself this. I'm driving home and they're doing the roads, yeah? I've never understood that if you're doing the roads, when you're not there, why don't you move the cones? Why should I be driving back on the M25? You still got the cones in the middle of the road when nobody's working on the road because you can't be bothered to pick up and put down the cones. And I can't understand that if you're just filling these holes, why it's going to take you 6 weeks. So all I know is this, whoever the guy is that's negotiating these contracts to fill 3 holes in the road for 6 weeks, he's the real genius. He's the guy. He's the plug. He's got the link to be able to give him that contract. Listen, let me tell you something. I could fill those holes in about an hour and a half. Give me some tarmac, give me some sand, and we can go and fill those holes right now. But yeah, he's going to take 6 weeks and have to put cones up in the middle of the road and do this and do that and do the other. That whoever secures that contract, he's the guy making dough. So the whole point is, how do we position ourselves in the same way so that we, you know, can benefit from what's happening in the Western world? Yes, we can learn how to trade the markets. Yes, these markets are going to tank at some point in time because they really are overcooked. Yes, we can invest in gold. But what other things can we look at? Because let me tell you something, the same strategy I'm talking to you about, indication, correction, continuation, breaks in structure, being able to see which way the market's going. Are we in a discount? These are the same things you're going to look at for any stock, for any crypto, for any market. It's called a market because a market's a market. It's a market. It could be a market for shoes, for ham, for clothing. It's a market. If there's lots of people in the market, the costs go down. Yeah? If there's not a lot of that's your spread. If there's not a lot of people in the market, like you're trading some weird pair, the spread's going to be very big because I'm like, wow, man, you're waking me up in the morning to come all the way down here to sell you this. There's nobody else here. Mate, I'm going to have to charge you petrol money because I've had to wake up out my bed. But if there's loads of people there, I don't charge you that money and the costs go down. It's the same. It's a market. Oh, the price is really cheap. Everyone wants to buy it. But the price is very expensive. All of a sudden, all the traders are selling these, you know, fake Air Maxes. Back in the day, they used to be Wembley Market. Left, right, and center, there was fake Air Maxes everywhere. Why? Because there was a demand for them. £25 Air Maxes. They were selling off to every single store that had £25 Air Maxes. I remember I was young, I used to go there and get my £25 Air Maxes. I'm not going to lie to you. But after a while, when people start going, oh, no, these are fake Air Maxes from the market, boom, 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 all of a sudden they come out of favor, you know, less people want them, the demand for them goes down, and all of a sudden they either start getting very, very cheap or they disappear from the market. Store doesn't want them no more. They're not selling. Nobody wants these anymore. It's a market. It's the same with anything. Guys, I'm going to play you this video here, all right, which is interesting. It goes back to what I was saying to you in regards to now is a moment in time. A moment in time that we had no control over. We didn't know that we was going to be born when we were born and that we was in a position that we could potentially invest in this moment in time. But a lot of people that took advantage of a moment in time by accident. It's the same with religion. I'm sorry, guys, whoever is here is religious, yeah? But it's the same with religion. The guy stops me in the middle of the street and says, yes, if you don't accept this religion into your world right now, you are going to not get into the kingdom of heaven. I said to the guy, so listen, I said, you know what? The only reason you're the religion that you are, I don't know you. I've never met you before. It's more than likely you was born into it. Is that correct? He goes, yeah, my mum was. It was the Mormon Church of, I don't know, Mormon Catholic Church or something like that. Yeah. I said, have you studied every religion in the world? He says, no. I said, so how can you stand there with your chest out in the middle of the street, stopping people telling me if I don't get into your gang, that I'm not getting into the kingdom of heaven, when you're only in your gang by accident? You could have been born a Sikh or a Hindu or a Muslim. You haven't got no information to turn around and say to me that your religion is the thing. But yet you're going to stop me in the street and you're going to tell me that these other religions are not going to get me in, but your one is. What if I grew up, what if I was born in the jungle, in the forest? There was no religion. Well, are all those people going to hell because they don't know your particular religion that you was accidentally born into? And we see this time and time and time again. This is the video I'm going to play you, that people, when by accident was born a certain time and was able to buy property, and they pretend that they're so much better, so much greater than other people, blah, 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 blah. But it's a complete accident. It's luck. Now, don't get it twisted. We have to know when we can take advantage of our luck. Is the reason why my whole rant for the last 20 minutes, half an hour, is about. It's about us saying, how can we benefit from what's going on? But if we wasn't born, like my son, who's 6 years old, he can't invest in AI right now, can he? He don't know what's going on. He ain't got no paper to do that with. But we can. Because I'm going to play this video. It's very, very interesting. It's about monopoly, and see exactly what I've just said, how luck changes the behavior of certain people, okay, and makes people believe that somehow they're a lot cleverer than they are, and see how it affects the behavior. And it's a direct correlation between how we see the, how a lot of the Western world, and even maybe ourselves guilty of it, look down or treat other people, think to ourselves that we're so much better than them, but only by accident. The same way that you was born in the UK, you could have been born in some European country that is an absolute shanty town. They exist. Why do you think they're coming over here? You could have been born in some mad ghettos of, some Eastern Bloc country, or you could have been born in the favelas of Brazil. But yet we pretend and we act and we turn a blind eye to certain things based upon an accident. Guys, watch this video. Guys, do look out for the news today. It says a bloodbath. There's a lot of stuff happening. Okay. But I think you'll enjoy this video. It's quite interesting. It's quite funny. Not funny. I haven't actually seen this particular video, but I've seen a clip about it. So I'm watching this for the first time. But let's watch it and see what happens, guys. Anything anyone wants to say before we quickly get into it?
No, I'm taking it in.
Love and blessings, guys. Yeah, listen, in regards to the markets, keep an eye on things. I know I didn't do so much trading, but I hopefully have opened your mind to think about. I'm going to put that link as well in the group for you to go and open up your own account. It's not going to cost you anything. Open it up. At least you know now, if someone says, yeah, we need to invest in the video, you can invest. You're ready to go. You're set up. Yeah, or maybe you're going to do your own research and put it, bro. And I'd say to you this, invest whatever you can. Furthermore, you should dollar cost average, which means every single month you just put a little bit more, buy a little bit more, you buy a little bit more. At least you've got it started. So when you're having a conversation and you're talking big talk about you're in Breakfast Club in the morning and JP spitting some game or at least you took action. Because let me tell you something. Education without application, yeah, is just entertainment. Yeah. You knowing something, but doing nothing about it, that's just entertainment. It's like you sitting on Netflix and just watching some documentary about something. It's just entertainment. If you don't apply your knowledge, it doesn't mean anything. Yeah? So just opening an account, just like trading, just being here every single morning and trading, opening an account, doing a profitable account, it completely separates you from a guy who's like, oh yeah, I watched a video on trading. It's all about supply and demand, isn't it? Bro, me and you are not the same, bro. I'm here every morning trying to trade these markets. Me and you are not the same. Yeah, it's the same with investing, guys. And it's the same with your business ideas. It's the same with the way you can start looking at the world and looking for opportunities and understanding that this world is not here designed and everything people say is not the truth. Yeah, everything people say is not the truth in this Western world because there's a motive. There's a motive of why we eat so much beef. We eat so much beef because they've got the cows and they turned around and said, listen, I'm selling everything. I'm selling beef. If they had horse or ostriches as much as they had cows, we'd eat ostrich burgers. Other countries do. Other countries eat horse. Other countries eat pig. You see, we watch all the China things or India, China on the Instagram. We go, oh, look at the cats, dogs. What? You've got a differentiation between a cat and a dog and a pig. You eat pig. A pig eats anything. A pig will eat itself. You eat pig, you know, I'm gonna have a bit of bacon, a side of bacon. You have no problem with that, but you're gonna look at another culture and go, but they're eating insects. They're animals. Well, I mean, sorry. Because of what reason? Guys, this is the way we have to change our mind, open it up, and understand how we can benefit our families. Guys, watch the video. Love and blessings. Thank you for your time. Sorry for my rant, but sometimes I just want to give a little energy, yeah? But love and blessings.
Love, family.